Order books, market depth, level 2 data, these are things that, to be honest, are very, very simple. But for some reason, most of the explanations are quite garbage, actually, to be honest. And so in this video, I'm going to walk you through exactly how to use that level 2 data so that you can make trades, you can buy, you can sell, knowing whether or not you're going to move the market, knowing where there is supply and demand so that you can make educated decisions about how many shares to sell or buy and at what price. Ready? Let's dive in. Real quick, I want to let you guys know that I just released my brand new bear market investing guide because money is made during bull markets, but fortunes are made during bear markets. And that's because the best assets in the world are on sale. And so in this guide, you will learn how to identify bear markets, how to identify what the best companies in the world are, and then you'll be able to figure out what the price you should get in at, because many times people miss out on bear markets and building those fortunes because they're waiting for the price to crash, not realizing that it's already at a great value. So in this course, I'm going to teach you how to do that. You cannot miss out because these bear market opportunities don't come along that often. They're pretty rare. You want to learn how to build your fortune when prices are low. Normally it's $300, but right now I've got it for $99 only. Discounted link is in the description below. All right. Recently, I was talking about market depth given the lack of liquidity in the treasury market, and I gave an example of a stock order book to explain what was going on there. And I saw a few comments from you guys asking me to make a dedicated video about it. So here it is. Right now, we are looking at a screenshot of an order book for Amazon shares. And this is from the Moo app, which you've heard me talk about before. Now, level 2 data, we're going to get into this here. Most brokers will charge you for this because they have to pay for this data from the exchange. Moo and some others provide it for free. And so if you aren't trading enough for your broker to give it to you for free, might want to check out one of these other discount or one of these other apps that will give it to you for free. Even if you're not trading with them, you can still use their platform. All right, so what we have here is first we have lines, and those basically show you how much supply and demand there is, potential supply and demand on each side, and here's how we see that. On the left, we see all of the buy orders. These are called bids. As we scroll down, right here, we are seeing that there is a bid to buy 30 shares at 106.64. There's also somebody who wants to buy 1 share at 106.63. There's also somebody who wants to buy 2 shares at 106.61. Now, since these are buy orders, these are bids, you can see these are decreasing prices. As we go down, the price decreases more and more and more. On the right-hand side, we have the ask. We have the sell orders. So these are going to be increasing prices. Somebody wants to sell at 106.65. And as we go down, we get somebody who wants to sell all the way at 106.75. As of right now, none of those orders have been filled. You have all of the people over here that want to sell, all the people over here that want to buy, and you've got their prices that they are requesting to buy or sell at. So right here, we have the best bid and the best ask, and we can see these are 1 cent different from each other. The person with the best offer price over here is 106.64, and the person with the best price over here is 106.65. So for a transaction to take place, these numbers will have to be the same. Either the seller will have to change their price to 106.64 to match the buyer, or the buyer will have to increase the amount they're offering to match the seller. Because until the two parties agree on a price, the transaction can't take place. So as of right now, there's a stalemate between the buyers and the sellers. Now I come in and I say, hey, I've got a boatload of shares that I need to unload. Let's say I've got 300 shares that I need to unload here, and I need to get rid of them right now. So I'm not going to ask for any specific price. I'm just going to sell them to whoever's next in line. If I want to know what price I'm going to be filled at, I can just look down here and I can see, okay, if I'm selling 300 of these things, my first 30 shares are going to get sold at 106.64 to this person who wants to buy them at 106.64. Then the next share that I sell will go to this guy at 106.63. Then the next 2 shares will go to this guy at 106.61. And he was just in line before this guy, even though it's the same price. He got his order in first. So my next 10 shares will go to this guy at the same price, 106.61. And then my remaining 260 shares or so that are left over will still get filled at 106.61, but they're going to go to this guy, and it will stop there because now all my shares have been sold. But if I then come in and sell a few more shares, then it's going to come down to this guy at 106.60, and then the rest will be sold then to this guy at 106.60 as well. And see, all of these are the same price. That's because they all want the same price. However, this guy just got in line first. This guy got in line second. Now imagine for me with a second that there's nobody that wants to buy Amazon right now. Let's look down here and let's say all of these maybe just say 1 share, and the bottom price here says like $50. This would be an example of how a crash can happen, because when there's no buyers or very few buyers, the sellers who are motivated to sell will have to burn through all the buy orders, and that will quickly drop the price, because this might be at 106, this might be at 90, this might be at 70, and this might be at 50. And so if I need to sell, I have no choice but to go to the willing buyers at the low prices that they're willing to buy at. It works the exact same way on the buy side here. If I have 700 shares that I want to buy, the first person that I'm going to buy from is this guy at 106.65. I'll get my first 100 shares from him. After another 170 shares or so are purchased at 106.65, there's no more shares left available at 106.65. So the rest of the 400 shares, 500 shares that I want to buy will have to be bought at 106.69 from this guy and then this guy. So when you see the ticker price of 106.60, that's just the last trade that happened. So when you go to place a trade and you see the quote, all that quote is telling you is what the last transaction happened at. If you have enough shares that you want to buy or sell, it's very possible you don't get filled at the price that you see. You might burn up through all the potential sellers or all the potential buyers and move the price. Now, one final note about this. When you look at these numbers, you're never going to see numbers like this from a company like Amazon. A company like Amazon, an ETF like SPY, the big companies, Apple, Microsoft, Facebook, and Netflix, the big companies, they're trading so many millions of shares so frequently that it's just all happening like that. There's no way that anybody that's smaller than an institution, a big money fund, will be able to move the market and burn up through an order book. However, if you're trading micro cap stocks with under $100 million market cap, and you're trading a sizable position, and maybe for these companies, they have a total daily average volume of a couple thousand or a couple tens of thousands of shares traded, well then you very well may have to look at the order book. If you're going to be placing an order for $100,000 of this stock that's only a $30 million market cap, you're going to want to take a look at the order book here, because if you're trying to buy those shares, you might see that there's really no market depth. And if you try and buy all those shares at market, you might be buying them up at $150, $170 per share. And what's going to happen immediately after your order finishes, the price will go right back down to where it was, because yes, you soaked up all those sell orders and you bought the price up, but now there's no more buyers at what the price that you just bought them at. All the other buyers were way down here. So next time a transaction takes place, it'll go based on the next equilibrium point, which after your massive order will probably be somewhere around where the price already was before. Which means that if you're going to be buying a large block of shares relative to the daily volume and relative to the market cap of the stock, you might want to at least do a limit order so that you know, hey, I'm willing to buy up to 106.69, but no more above that. So you'll soak up any of the sell orders that are available up until that point, and you won't fill any more past that price, and you'll only continue to fill up your order as long as there's people willing to sell to you down here. And finally, if you are playing with a little bit bigger money and you're buying a stock that's not a micro cap or not a penny stock, and you're still going to be potentially moving the market, Call your broker. Tell them, hey, I need you to work this order for me. I need you to do what's called a not held order, because you're saying I'm not holding you to a time or a price on this. I want you to work this order so that you don't move the market. And they'll take a day, 2 days, 3 days to buy or sell the shares in order to not move the market. And they'll do it based off of, some algorithms like volume weighted average price. And they'll make sure that they're only selling or buying a little bit at a time as volume becomes available, so that the market doesn't sniff out and get wind of the fact that there's a large block trying to be bought or sold. Most of the major discount brokers out there like E-Trade and Fidelity and Schwab and TD Ameritrade will do that for you for no extra cost. So I hope this helps. Make sure you're trading smart, and if you're trading a large amount of shares relative to the volume, the daily volume or the market cap, make sure you're at least looking at the order book available so that you're not moving the market and getting a terrible price for yourself. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.